Welcome to this week's edition of Trade the Trend, a weekly video discussing where the stock market is heading. I'm Jason McIntosh. It is Friday, the 4th of February 2022. As always, this is general commentary and doesn't take your personal situation into account. Alrighty, with that said, let's jump over to the first chart. Well, I thought we'd start with the Nasdaq because really it's been another fascinating week and it's gone quite close to the scenario that we were talking about last week. So let's start by drawing in some of the support. So I'm just going to line this up. Yeah, so we've got a support zone on the Nasdaq which comes through roughly around about here. So that's around 14,000 to 13,700. What it does, it picks up these two highs from last year, and now we've also got this support. So that makes it a pretty solid support zone. And so look, we've had the market bounce off those lows. And what I'll do now, what we'll actually do, let's jump over to the 4-hourly chart and just have because you've heard me speak before about looking at the 4-hourlies because what they do just gives you a bit more of the internal movement of the market, which you don't get in the daily charts. So, okay, so here's our 4-hourly. So what we were talking about last week we were around about here, and I thought maybe the market was going to have one more push lower below support. I thought it might have broken support briefly and then pop back up above it, and then had the rally. So we got the rally, but we didn't get that final sell-off. Market tried a couple of times here, didn't get through support, and we've rebounded. So I think from there we can say that I think we've got some sort of an interim low in place that could well hold over the next few weeks, which I expect actually to hold over the next few weeks. And very interesting looking at the market here. It was really felt like quite a panicked market. And that was evident in things like you're looking at the volume that was going through some of those inverse ETFs and those bear market ETFs. And then there was I was seeing reports of record put buying in the option market. So these are all signs of a highly anxious market. And often when that sort of stuff happens, it's also often a sign that a low point of some degree is in, or close to being in, and that's what's proven to be the case. So let's start by putting on some Fibonacci. So this is the top of that move we've just had down, and now we've got a low point we can use. We can get the Fibonacci levels. And what's interesting is that this rebound has come pretty much up to the 50% mark, 50% retracement. And then over the last couple of days, it's just started to roll over and bounce down from that 50% retracement. And look, so I think what's interesting now is to think about what could happen from here. So I think the minimum's already been done. The minimum for a rebound's done, coming back up to that 50% retracement. But I think there's more of this to go. I think there's going to be more rebound potential in this market. And a couple of ways it could happen is that from where we are now, over the next few days, we could get another move lower, and then from there the market starts to work its way higher. That's one possibility. Alternatively, we don't get that move lower, and over the next few days the market starts to make its way up towards the top of the band. We don't know. We just got to wait and see how it all happens. But either way, I think it's going to be. I think we're in for some choppiness in the market. So like up days, down days. Not really having a clearly defined trend. But I think it's going to make its way and work its way a little bit higher over. Possibly, look, this could drag out over the next 1 to 4 weeks. You just don't know how a rebound's going to play out time-wise, but some higher levels at any rate. I think we could be looking at. And now I want to tell you about one of the concerns I have. We'll go we can make up bullish cases and bearish cases, but I want to go over a bearish case, a bearish scenario, which I have for this market, which I think there's I think the possibility of this, or the probability of this, is reasonably high enough that it's worth discussing. So what we could see unfold is, so if that scenario I was painting a moment ago plays out, and we do get we get a bit more weakness, and then the market sort of makes its way back up here in some sort of manner over the next few weeks. What could happen then is that could set the market up for what we'd call a zigzag decline, and from there the market could potentially. So zigzag decline is where we go down. There's the zig, we get an up move, then we get the zag. So what could happen from there would be the market peaks out somewhere around maybe those Fibonacci's, maybe a bit higher, comes back down, retests that support, get a bounce off it, and then breaks below it, and we have another leg down. So that's a possibility, which is, you got to say, that's currently on the table. It's look, it's a little bit, it's one of the less pleasant scenarios, but there's no point not talking about something because it's unpleasant. You've got to be aware of it. You've got to know it's a possibility, so you can be prepared accordingly. If we do break the support which we've got on the chart, the next level of support, look, there's a good, you can draw supports in various places, but look, there's a good one that comes in around there, which is around 12,300-ish. Picks up, these highs, this low. That could be a target region if the market breaks down. I do emphasize if, because it hasn't happened yet. And it's interesting because you can do a measured move as well. So we'd measure that from the high to the current low. And we're getting ahead of ourselves because we don't even know this high point if this was to happen. But just guessing, say we've got a high point around there, and then you project lower, you do get targets potentially down around here, which is around that support region. Let's just do a measurement of that just to see what we're talking about. And that is, what's that? That's around 26%. Could the Nasdaq have a 26% pullback from the high after such a big run over 18 months? Well, I think you have to say absolutely. So that's why I'd say this is a scenario which is on the table. It's not going to play out next week, but it could play out over the next 1, 2, 3 months. Let's just wait and see. Let's just watch how the price action unfolds. The S&P and the Dow, they've got similar structures, but I think it's the Nasdaq which has the most downside risk. It's really the those big tech stocks which have run so far and are so far above those lows from back down here in March 2020. I think that's where the vulnerability is. So when you look at the S&P 500, it doesn't look as vulnerable as the Nasdaq, and then you look at the Dow and it looks less vulnerable again. If this were to happen, you get downside everywhere, of course, but I think this is where the most downside risk is. And so let's just wait and see. We'll wait and see how this rebound takes shape, and then we'll come back and discuss it further. Just quickly, I want to jump over to the Russell 2000, the small caps, because this is another interesting one to look at. We've talked about this a few times. We'll talk about it quite a lot, actually. I've left these markings on from a couple of weeks ago when we last spoke about it. So we've got this, this breakdown from this range, which held for around 9 months, had a false break there, came back in, now we're broken to the downside. When you do a measured move of this range, so you measure the width of the range, and then you project it lower, that's where this green line is, that's the theoretical target. So this doesn't look like a lasting low. It's a temporary low, I think. And if this were to look, we could see a bit of a sideways move over the next week or two, perhaps, and then maybe we get another leg lower in the Russell and the small caps. If that sort of scenario played out, well, then it probably lends more weight to that bearish scenario for the Nasdaq. And what's interesting about the Russell is it's down 22% from its high. So that technically now that is in a bear market. So we have our first of the US indices to hit bear market territory. Nasdaq's not far behind, and S&P and Dow further back. But look, I think at the moment we just need to be prepared for more downside. choppiness and then more downside after this rebound plays out. And now in a moment I'm going to take a look at gold, copper and uranium. But before I do that, I want to briefly jump across and have a look at the ASX 200 because it's doing interesting things as well. And so what we've had happen here over the last week is we've had a rebound of support. So this is a support region through here that we've kept an eye on, somewhere around that sort of marks, around the 6,900 level. We've got some highs here, picks up some lows, picks up the lows from a week ago, had a brief break below it, then it's rebounded back up, and now we're having the bounce. So where to from here? I think we've got more upside. Got more upside in this bounce. I think we need to correct this entire move down, which now looks like a complete move. It's not to say there's not going to be another leg to it later on, which goes further down. But for now, I think this is probably going to be quite an important low at least for the time being, and it's going to give us our rebound. So where we've rebounded to now, I'm going to draw in another band. This used to be a support. This is a support level which we watched for quite a while. It's in place for something like about 6 or 7 months. You've got highs here, lows, held all the way through. Then we got the breakdown. Now we're having the rebound, and the rebound's bringing us right up to this, what has now become a resistance zone. And it's going to be interesting to see how the market handles now we're back at this point. So let's skip over to the 4 hourly, just get a little bit more detail. So what we're looking at here, it's interesting just looking at the Aussie market now, just as I am on just near the close on Friday afternoon. It's just looks like it's going to close at at a high for the week. So I think that's a good sign that I think there's more rebound coming. So let's put the Fibonacci's on, because now we've got this, what looks to be a complete move down. We can do the Fibonacci's. I'm just going to take that support out so it doesn't clutter up our chart. So look, here's the Fibonacci. So we've come back to the 38.2% already. I think there's scope to get back into up towards the 50%, which is in the upper boundary of that resistance band we had. That would be around 7,200. Perhaps it even gets higher. Perhaps it even gets up there in that 7,300 sort of mark. Look, I think that what I've been doing, I've been using this rally to lighten my portfolio. I've used it to sell some stocks which hit their exits over the last couple of weeks. So what I'll normally do, I use end of day data. I'll look at my exits at the end of the day. I usually then sell them the next day or soon after. But what's happened through this period here, some of those stocks have then just moved quickly below my stops, and I've taken the view that the market looked oversold, it was near support, and there'd probably be a rebound, and that would give me the chance to do some exits, and that's what I've done. So look, that said though, I bought a stock today. So it's not a case of just getting all bearish and looking to sell everything. It's about selling stocks which are hitting their exit points, selling stocks which are weakening, but then holding stocks which remain in their broad upward trend and using wide trailing stops to try and see off volatility and stay with those trends. The stock I bought today, it's a stock which was breaking higher. It was breaking up to new highs. I had a buy signal. So it's a case of follow the price action, not the emotions, not the fears, not the headlines. And as I'm always telling my Motion Trader members, we don't know what the market's going to do next, but if you've got a good trading plan, well, look, then you know what you're going to do. And I think that's the key to taking out the emotion and giving yourself consistency, giving yourself a repeatable path for profiting from the market. And if you need some help in this area, come over to my Motion Trader website at motiontrader.com.au. I've got lots of free resources, things that might help you. Just work on this area of trading plans and the structure and the trailing stops and so on. So jump over and have a look if you think that might help. All right, so I want to go over to gold next. And look, and by the way, if you're getting some value, please hit that like button and please leave a brief comment. Just, hey, I like the video, just something brief like that. All that does, it tells YouTube that people are watching, people are engaging, that it's interesting, that it's helpful, that it's useful. Then they show other people, and that helps build my YouTube channel, and it's really helpful for me. So please do that if you're getting some value. So okay, so now let's go into the home straight and we'll look at some commodities. So gold is our first one. Now, I haven't spoken much about gold for a while. Let's just switch back to the daily chart. And the reason I haven't been speaking much about gold is because really, frankly, it hasn't been doing very much to talk about. So let's just, what we've had really in gold over the last, how much? Well, maybe it's 7 or 8 months. We've just been in this big range. It's not doing much. If anything, the range is contracting, the range is getting tighter, so there hasn't really been much to say. And for me, what I'm doing with this, hasn't been much to say, but I watch gold all the time. It's one of the first markets I look at each morning when I put the screens on and just see what's happened overnight. It's check out the US markets, like the Nasdaq, Dow, S&P. Then I'll look at gold. So let's tighten up the range. So what I'm looking at now, I want to see gold break either to the top side or the downside to get some direction for where things might be going over the near term, and then the near term can then lead to the medium term. Could even use this point here, but I prefer to use this one because it's just been a little bit longer standing. And at this point, look, it really could go either way. There's I think gold's got a really good medium to longer term story. I'm bullish. I'd say am I very bullish? Yeah, look, I'd probably say, push comes to shove, I'm very bullish on gold over the medium to longer term. I think it's got a great overall chart setup, but that doesn't mean that it's the next move's going to be up. We've always got to be aware of bearish scenarios that work against our prevailing view. It's like, let the price action rule, not your opinions. So I'm not preempting any break in gold to the top side because, quite frankly, that may not be what happens. I'll give you a bearish scenario. This is a bearish scenario, or well, it's at least short to medium term bearish scenario. It's let's just say we get another leg down. So to give us a downside target, we can do a measured move. We measure from the high to this low, back to this high. That gives us a potential target down around this band here. And this could be part of a zigzag correction in gold. So, the first leg, so you'd have the wave A, the wave B, and then the wave C. And what that could look like, it could look something like that. You get the break, get a rebound, and then gold makes its way down there over, could be any time frame, could be a couple of months to 6 months, don't know. And this is possible. So let's look at this on a weekly chart just to put some perspective to that sort of time frame and decline. When you look at it on a weekly, gold could do that and still maintain a longer term bullish picture. So from a washout like that, you could then get the makings of a new bull market, and it could be off and away. So this isn't a prediction, it's just going through a possibility. This is the sort of thing that could happen. Because I know there's a lot of bullishness about gold out there. There's a lot of people who really think, gold's got to run. They look at all the quantitative easing, the central bank balance sheets blowing out, inflation picking up. The only thing that hasn't come together has been gold hasn't rallied. So there's a lot of people who are sitting there who are very bullish on gold. They see this big longer term potential. Markets don't do what everyone thinks they're going to do or everyone wants them to do. There's a possibility that maybe the scenario is there's another washout coming. Maybe all that bullishness, pent-up bullishness, has to be washed out with another decline to the downside. And then that could set up the next move higher. So this is why I'm not preempting the break, because I know there's also this negative or this near-term bearish scenario that could play out. Maybe it doesn't. Maybe we get our upside break and maybe it's off and away. but we've got to wait and see. That's why it's always, I think, important to you follow the market, not your opinions. And let's quickly jump to copper, because copper's got a similar situation. Again, there's plenty of people with this long-term bullish view on green metals and copper and all the copper needed for electric vehicles, and they say copper's got to go higher. And maybe it does, but it doesn't mean that it's going to go higher this month or even this year. It's similar structure to gold, big up move, then we've had this big sideways consolidation. Now, the sideways consolidation could be setting the market up for a big advance, or it may not be finished. It could be a case that we do get that decline. It could be a case that the market isn't ready to move up yet, and we get that sort of move, like in gold, to flush out all the bullishness which is built up there. Maybe we need to maybe the market's going to shake things up, get a few people disillusioned, get them to move away, get them to exit their positions, and then when that happens, and I've seen this happen more than once that happens, the market then reverses and up it goes. We don't know, it could go from here, but be aware there's always an alternate scenario, and you just need to be aware of that, because that helps you structure your risk and your exit stops, and work out how to really put your portfolio together and be aware of what could happen. But again, that's why I'm not talking about it much, because we are in this big sideways range, and until we break from there, there's probably not a lot to say. So lastly, let's quickly jump over to uranium, and this has been one which, again, I think there's a great medium to longer term bullish story there, but it's just a matter of you've got to give the market time to do what the market's going to do. There's a support band which comes along here, which has been holding up quite nicely over the last, last 4 months now. The one niggling concern with this is I'm looking at these highs, and the highs keep getting lower. So that is somewhat of a worry, because it does open the possibility that uranium's getting ready to do that, break through support. So that wouldn't neutralize the longer term bullish outlook for uranium, but it would certainly slow things down and put that, I don't know, maybe the shorter to medium term bullish outlook would then have to go on hold, and we'd need to see what happens from there. Again, there's plenty of bullishness in the uranium market, and it could be a case that there needs to be more players washed out before this market is ready to go. But look, let's just wait and see. So look, I think there's some very bullish possibilities out there, but if they happen, it's going to be on the market's time, not ours. So good trading and investing is as much about patience as it is anything else. So it's really about wait for the market to show its hand, let it tell you when it's time, and I think that's the way to play it. So look, let's call that a wrap for this week. Hope that was helpful. Hope it was interesting. Thank you for joining me as always, and I look forward to checking back in with you next week. Bye for now.